something very strange is happening right now. And most people have no idea. The world, slowly but surely, is walking away from the US dollar. Now, no, the dollar isn't going to collapse tomorrow. But this shift, it's already happening, quietly, steadily, and now it's accelerating. Central banks are cutting their dollar reserves. Major oil deals are being signed without the dollar. And even US allies are asking the question, should we start moving away too? All of this is fueling the global movement away from the US dollar, what we call de-dollarization. And now, even the biggest institutions in the world are sounding the alarm. BlackRock is warning of what they call a precarious position for the US government's debt. Deutsche Bank says the market is going through a rapid reassessment of the dollar's global role. And JP Morgan's CEO, Jamie Dimon, he says we're nearing a crack in the bond market that could change everything. This is not normal. These are the early tremors of a much bigger shift, a loss of faith in the US dollar itself. And if that trust continues to break down, we're talking about nothing less than the unraveling of the financial system as we know it. But to understand what's really happening and why so many countries are walking away from the dollar, we need to talk about a powerful movement gaining speed behind the scenes. It's called de-dollarization, and it's already reshaping the future of money. Part 1. What is de-dollarization, and why should you care? This is no longer a theory, it's an unfolding reality. Let's break this down. What exactly is de-dollarization, and why should you care? De-dollarization is the global movement to stop using the US dollar in international trade, reserves, and settlements. In simple terms, it means countries are saying, we don't want to rely on the US dollar anymore. Now, this idea used to be fringe, something only economists or gold bugs talked about. But fast forward to 2025, it's mainstream policy in major economies. Countries like China, Russia, India, Brazil, and others in the BRICS alliance have actively started ditching the dollar. We're talking about real transactions. Oil, natural gas, agricultural goods being settled in local currencies like the yuan, ruble, and rupee. And they're not just talking. They're building systems to make it happen. BRICS Pay, a blockchain-based payment system, is already in pilot use. China's digital yuan, or ECNY, is live and being used in select cross-border transactions. And as of mid-2025, over 25% of BRICS oil trade is no longer being settled in dollars. Why? It started with sanctions and tariffs. When the US freezes reserves or slaps on 100% tariffs, like Trump is now threatening again, other countries see that as a weaponization of the dollar. And they ask themselves, what if we're next? So they prepare, they diversify, and they de-dollarize. Let me be clear. This is not some dramatic collapse happening overnight. It's slow, it's quiet, and it's already underway. The dollar isn't being replaced by one currency, not the yuan, not the euro. Instead, it's being gradually pushed out by a basket of alternatives. This is a structural shift. And if you're not watching it now, you're going to wake up one day and wonder what happened. Now, if you're thinking, well, maybe this is just talk, maybe the markets aren't reacting yet, think again. Let me show you what BlackRock, the largest asset manager in the world, is warning about right now. And what's happening in the bond market should scare everyone. Let's get into that next. Part 2, BlackRock, bond yields, and the new market warning signs. Let's talk about something that most people are completely missing right now. And it's something that BlackRock, the world's largest asset manager, just sounded the alarm on. They said, and I quote, "Debt is now the single greatest risk to the US dollar special status in global markets. Right now, the US national debt stands at $37 trillion. But here's what's even more concerning. The rate at which it's growing. Thanks to tax cuts, stimulus packages, increased military spending, and ballooning interest payments, we're now adding over $1 trillion in new debt every 100 days. Let that sink in. That's faster than at any point in modern US history, even during wartime. And here's why this is a serious, structural problem. 1, interest on the debt is exploding. 2, foreign buyers are backing off. 3, the trust is breaking. Here's the harsh truth. The US government cannot pay off this debt. So the only options are borrow more, raise taxes, cut spending, or inflate it away. Because if the US starts eroding its debt by inflating the dollar, then international investors will dump the dollar. And we're already seeing signs of that. That's what de-dollarization is really about. Just look at what's happening in the bond market. 10-year and 30-year treasury yields just jumped around 5%, and they did it at the fastest pace since 1982. That's not just market noise, that's panic. BlackRock explained why. There isn't enough natural demand to absorb the amount of debt the US is trying to sell. Think about that. The US government is issuing over $500 billion in debt every single week, and foreign investors are stepping back. So who's buying? Fewer buyers means higher yields. Higher yields mean higher interest payments. Higher interest payments mean even more debt. It's a vicious cycle. And it all leads to one key takeaway. Investors aren't just selling risk, they're losing faith in U.S. assets. That's not just a short-term blip. That's a shift in confidence. And when you lose confidence in the world's reserve currency, everything changes. So, what does this mean for the dollar itself? Let's zoom out and look at the big picture, the global dominance of the dollar, and how it's been slowly but steadily declining for years. Part 3, the decline of dollar dominance by the numbers. Let's take a look at what's actually happening with the US dollar status around the world. And the numbers don't lie. In the year 2000, the US dollar made up around 72% of global foreign currency reserves. That number today, as of mid-2025, we're down to about 58%. That's a 14-point drop in 25 years, and it's still falling. Now here's the key thing most people miss. The dollar isn't being replaced by just one currency. This isn't about the Chinese yuan coming in to take over. That's not happening. What is happening is that central banks and countries are moving into a basket of currencies, little by little. They're holding euros, yen, yuan, Australian dollars, Swiss francs, and more. It's death by diversification. And we're seeing this spill over into trade too, not just reserves. According to the latest numbers, about 25% of oil trades among BRICS members are now settled in non-dollar currencies, up from less than 10% just a few years ago. China and Russia, already doing most of their trade in yuan and rubles. Brazil and India, pushing for local currency settlement as well. So let's be very clear. The dollar isn't collapsing. It's being chipped away at, quietly, gradually, and intentionally. This isn't about one currency replacing the dollar. This is about the world replacing all of it, bit by bit. And now, we need to talk about why this time is different. Because normally when there's economic turmoil, global investors rush into the dollar and US treasuries. But lately, that's not what we're seeing. Part 4, why this time is different. Let me explain why this time really is different. And it starts with tariffs and sanctions. When President Trump reintroduced his reciprocal tariffs earlier this year, it didn't just rattle our trading partners. It rattled the entire foundation of the dollar system. Here's what happened. Tariffs and sanctions, less global trade with the US, less trade, less demand for dollars. Less dollar demand countries start selling US treasuries. Treasuries sold off, yields spike. Yield spike, dollar weakens even more. In short, the very thing that's supposed to protect America, tariffs, is now accelerating the de-dollarization feedback loop. And this is not just speculation. Top strategists at Deutsche Bank recently said the markets are going through a rapid structural reassessment of the dollar's role in the world. Their words, not mine. Even BlackRock's co-founder came out and said, something is going on here. More than just deleveraging, because here's the truth no one wants to say out loud. This is how a global reserve currency quietly erodes. Not with a bang, but with a series of quiet exits. Now, if you're wondering why this matters so much, why everyone from central banks to private investors is watching this unfold so closely, it comes down to one thing, the privileges that come with issuing the world's reserve currency. Let's talk about what we gain by being at the top, and what we stand to lose if this de-dollarization trend keeps gaining ground. Part 5, the privileges of the dollar, and what happens if we lose them. When the US dollar is the world's reserve currency, it gives us 3 enormous advantages. 1, lower borrowing costs. Because global demand for dollars is high, countries and investors around the world buy our debt, US treasuries, even when the interest rate is low. That's why the US government can borrow trillions at cheap rates. It's like being the world's most trusted borrower. 2, global pricing power. Oil, commodities, food, and goods. Most of it gets priced in dollars. That means we don't have to convert currencies to trade. Other countries do. That gives US companies a built-in edge in global markets. 3, sanction leverage. Because the dollar runs through nearly every global bank system, when the US imposes sanctions, it works. We can freeze assets, restrict trade, and pressure governments without firing a single shot. That's real geopolitical muscle. To live beyond our means. We import more than we export. We spend more than we earn. And somehow, it works. But here's the thing. That privilege is not guaranteed forever, and we're already seeing cracks in the foundation. If the dollar loses reserve status, even slowly, here's what happens. The US debt becomes more expensive. Interest payments go up. Foreigners won't lend us money so easily anymore. Imports get pricier. Everything from electronics to groceries could cost more. Why? Because now we'd need their currency, not the other way around. And most importantly, America's global influence shrinks. Sanctions stop working. Allies stop listening. and adversaries stop caring. Bottom line, without reserve status, America becomes just another debtor nation with a $37 trillion IOU. And if that sounds dramatic, I want to remind you, this isn't a hypothetical. The shift has already started, slowly, quietly, but it's happening. Now, I'm not telling you this to scare you. I'm telling you this because you need to understand the rules are changing. So the next question is, what do you do about it? Let me show you exactly how I'm positioning myself for this new reality and what you can do too. Part 6, what I'm doing, smart hedge strategy. Now look, I'm not here to scare you. I'm not saying the dollar is going to vanish tomorrow or that the entire system is going to collapse overnight. That's not what this is about. But I am saying this, the world is shifting and I'm not waiting around for a wake-up call. I'm preparing. You should too. Here's what I'm personally doing, and this is not financial advice, just what works for me. First, I'm diversifying out of dollar-only assets. For years, a US-only portfolio was considered safe. But if the dollar is under pressure, then being 100% dollar dependent could turn into a silent risk. So I'm holding gold, both in physical form and through ETFs like GLD. Why? Because gold doesn't care about interest rates, Fed speeches, or tariff headlines. And in 2025 alone, gold is up around 9% year to date. That's not just a coincidence. I'm also in silver, ticker SLV if you're looking at ETFs. Silver has outperformed gold this year, up about 15% YTD. It's more volatile, but in a de-dollarizing world, that volatility can work in your favor. I'm allocating more into international ETFs, like VWO and VEA. These give me exposure to economies that aren't tied to the US fiscal mess, and they benefit as countries like Brazil, India, and China strengthen local trade. And finally, I'm in real estate through ETFs like VNQ. Real assets, real cash flow. Yes, interest rates are high, but the long-term trend for housing supply and inflation still supports this space. Now, let me be super clear here. I'm not panic selling my US assets. I still hold some US stocks and I'm not calling for a dollar collapse. This is not a doomsday strategy. It's just common sense in a world that's clearly changing. And yes, I've also dabbled a little in cryptocurrency. Volatile? Absolutely. But so far in 2025, it has gone up and it gives me some non-correlated exposure. So what's the mindset? Long-term. Period. This isn't a trade. This is a reallocation, a hedge. Because when you see the cracks forming, you don't wait for the whole wall to fall down. And that brings me to the big question everyone's asking. Is the US dollar still the king of currencies? Or are we witnessing the beginning of the end? Let's break that down. Part 7, final thoughts. All right, so let's take a step back. Yes, the US dollar is still the dominant global currency. It's still used in over 80% of trade settlements, it's still the core of global reserves, and most central banks still hold dollars as their main store of value. But here's the reality. That dominance, it's not guaranteed anymore. Trust is fading, and that's what matters most in currency markets. We've already seen the shift start. BRICS nations, Brazil, Russia, India, China, South Africa, and now expanded with countries like Iran and Egypt, are openly pushing for a multipolar financial system. They're building tools like BRICS Pay to bypass the dollar entirely. They're trading oil in yuan and rubles. Central banks across the world are buying gold at record levels. So is the dollar collapsing tomorrow? No. But is it losing ground, bit by bit, trade by trade, bond auction by bond auction? Absolutely. Here's what I want you to remember. You don't need to panic. You don't need to predict the exact moment the dollar stumbles. But you do need to be positioned for what comes next. If you found this helpful, hit the like button. It tells YouTube this is content worth sharing. Drop a comment below. Are you worried about de-dollarization? Have you started making changes to protect yourself? And subscribe for real-time updates. Until next time, stay informed, stay diversified, and stay ahead. Thanks for watching. Have a nice day.